give me a couple of minutes, I'm going to show you how you can beat the market by simply going to cocktail parties. And I know what you're thinking. Oh boy, another guru, you know, some trader, whatever. He's going to act like, you know, he could beat the market. Not at all. Not at all. Actually, this isn't my idea either. It's from Peter Lynch's book. I'm no genius at all. I'm just open-minded, and this is an idea I wanted to share with you guys for the next time you go to a cocktail party. And this is coming from someone who recently almost gave up on investing and wanted to just buy the S&P 500, because I would tell myself, look at all these professional investment institutions that can't even consistently beat the market. Like, why would I be able to beat the market? I should just buy the S&P 500. Fuck this. But Peter Lynch has really changed my mind. Not just him, some other investors I follow closely too. And in fact, I would argue by far an amateur investor has an edge over a professional investor. And today's video isn't going to be about why exactly that happens. In a nutshell, though, it has to do with the fact that professionals are constrained not only by strict rules they have to follow, but also risky companies going sour to get them fired. Apple going sour will never get them fired. For the record, full transparency, this car was not purchased through investing. Actually, I've lost a lot of money investing. You've seen the first video on this channel, you know that in just 1 year alone, I lost $300,000 investing. Now granted, this was a long time ago, and I've learned a lot since then. This is precisely what's made me a better investor, matter of fact, and has changed my whole philosophies. You see, I went through all the stages. I went through the stages of getting my feet wet as an investor when I was around 20 years old. And I had a lot of money from my very successful startup business, which I talk about on this channel all the time. That's the purpose of this channel. And I lost a lot of it, over $300,000 in 1 year. Now, I talked about why I ended up selling that, you know, for tax purposes, and I was clever with it, you know, making sure it wasn't a wash. That's a separate topic. My point is, I've lost a lot of money though. And after that period, I was sort of scarred. And I went from investing into, since I didn't know how to invest back then, I just thought, let me just buy these good companies, you know, companies that I think will impact the future. That's really not all that goes into investing. So after that, I was like, okay, at this point, I'm just gonna invest in the S&P 500, you know, it's all I could really do. And for a long time, after that scar, I really thought there's no way an individual could consistently beat the market, but you can. You can by picking good, solid companies. Now, talk about this cocktail method and how you could beat the overall market using this cocktail method. This particular video has nothing to do with how you pick a good quality stock. It's just about predicting the general movements in the market. Predicting is the wrong word, because no one can predict the market. That's absurd. But what made Warren Buffett a historical investor compared to just the great investors was there was one particular period where he said, I can't find any fairly valued companies. And he returned all the money to all the investors. And then the market went down after that. One of the few people to ever do that. And that's what makes him a historical investor. Now, how do you know when the market is really overvalued or really undervalued? You know, what's What's the methodology for this? A lot of people like to look at different indicators like interest rates. They try to predict the Federal Reserve's next move with, you know, their fiscal and monetary policy. We got fans. Yeah, hold on, I'll get back to that in a second. Money doesn't buy happiness. Depressed as important stuff to talk about. Let's not fool around. Not too much. We'll save that for another video, you know? We gotta get back to important matters so you guys can get a car like this too, right? Don't worry, I'm not about to sell you a stock course or anything. Don't worry, we're gonna keep this very simple. So what's this cocktail method? What's the cocktail method to beat the markets? Well, Peter Lynch describes it like this. When he would go to a cocktail party and people would ask him what he would do, he would respond with his job. You know, he's an investor. And there'd be 4 stages in a market where he would notice people's reactions. The first stage of the market, let's say it's a market trough. You know, there is a really bad downturn in the stock market. Everything's down. You know, it was just after 2008, for example. After he says that, people quickly just nod their head like, oh, and then they just, you know, walk away. Or if they don't walk away, then they start talking about the Celtics, change the subject somehow. Now that's the bottom of the market. That is the bottom of the market. That is the best time to buy. When investor sentiment is at an all-time low, when even the professionals are telling you it could go down further, when the professionals are telling you the worst is yet to come. When you see professionals talking like this, it's a good thing. That's exactly what you want to hear. That is the best time to buy. Now, of these 4 stages of the market, then comes the next stage, the third stage. The market has rebounded slightly, around 10 to 15%. people are still pretty skeptical. So when people ask him, Peter, what do you do for a living? And he says, I'm an investor. They don't just walk away this time, but you know, they nod their head and they're like, oh, that's cool, and they continue the conversation a little bit longer. They stick around. They don't leave him completely, but in general, there's not much interest. It doesn't cause them to completely walk away, but they don't continue asking him any questions about the fact that he's an investor. You know, there's still no interest. It's not disgust. It's not like they're repulsed about the topic, but they're not really interested. They're more just indifferent to it. And then comes the third stage of the market. The third stage of the market, as Peter's getting his punch. People ask him, Peter, what do you do for a living? And he's filling up his punch, and he's like, I'm an investor. And they start asking him, like, oh, no way. Like, I've always wanted to start investing. You know, do you have any recommendations? This is the third stage of the market. When people are asking him for recommendations, people are genuinely interested in wanting to invest. People actually want some suggestions from a professional on what to invest in. And by now the market's already gone up like 30 to 40% from that bottom. Now this isn't the fourth stage. Don't worry yet. It's okay that the market's interested. Maybe not the best time to buy at this time when most people are very interested, but you probably don't want to sell either at this time. In general, I mean, I'm more for holding long term and not trying to time the market. I'm just saying, like, if there's a particular company you're looking at, you know what I'm saying. So, the fourth stage of the market, things have already gone up a ton from that trough. Things are up, you know, 50% more, you know, and basically all the analysts are saying, like, the economy's booming, green pastures ahead, everything's looking good. Like 8 out of 10 analysts recommend getting into the market now. Now when Peter's getting his punch at the cocktail party, now when he says he's an investor, they cut him off and they start giving him stock picks. The dentist walks up to him and starts giving him stock picks. Could you believe that? This is the fourth stage of the market, and it's at this point is about to hit the f***ing fan. There is way too much confidence in the market. This is when bubbles happen. It's always a good thing when some bad stuff is happening, because it prevents the market from reaching that top and inevitable fall afterwards. I'm happy when I see, you know, news. In general, I try to avoid the news because I don't trade off. I don't trade in general. I don't invest off of the headlines. But if I do see a headline, you know, if I happen to come across it and it's a negative one, I'm happy. You know, when I see that there's bad news, I'm happy because I know that that probably means we're not at a market top. The market top is when things start feeling eerie from a skeptical investor's perspective. Now, being a contrarian investor doesn't mean always do the opposite of what the market does, because sometimes the consensus is right. Like in stage 3, for example, there was still more room for the market to move up. You don't just want to do the opposite of what everyone's doing. I lost a lot of money doing that by buying Alibaba when there was all the China scares. So don't just do the opposite of what everyone's doing. Being a contrarian investor is more like just questioning the sentiment. And a good tool for this on CNN.com, I think, it's the Market Fear Index. And I remember when there were all those tariff scares, I made a video on this channel. You can go back, I have the receipts. At the bottom of our recent low, you know, in early April or whenever it was, I pulled up that chart. The sentiment was like almost all the way down to max fear. Not total max fear, but it's pretty damn close to it. And I said, guys, this is a great time to get into investing. You can go back and check the dates on the video, you'll see. And then the market rebounded quite a bit. Now, I'm not saying the market's going to continue to go up. In fact, I'm really not sure, because apparently a couple days ago we had one of the biggest retailer investor purchasing days in history. So that's actually not a good sign. But in general, it seems like there's more bad news and scary stuff out there than good news. And I like to see that, because I know it's not a market top. And so I hope you find this analogy useful. I didn't come up with this. I'm not taking any credit from it. This is from Peter Lynch's book, One Up on Wall Street. Would highly recommend it if you're looking to make money investing, not trading, not gambling. Make money by buying good quality companies and holding them for long periods of time, because that's how you build real wealth. You know, there's a bunch of kids out here driving nice cars like I do, and they're probably trying to sell you a course or something on how to trade. I'm not going to do that, because I know that's not how you actually make money. I know how to actually make money. Maybe I haven't made that much investing, but we're getting there. You know, technically, you know, in terms of like my portfolio value, you know, I'm up, but capital gains wise says otherwise. My taxes say otherwise. But look, you make good money by buying good quality companies and holding them for long periods of time, not by trading day in, day out. Definitely not day trading. Definitely not by looking at charts and trying to find patterns. It's not how you're going to make wealth long term. You know, you might get lucky here and there trading, but it's not a sustainable path to go on. I would advise against that. But yeah, if you're new to this channel, this is, I don't even know what to call it. It's not just an entrepreneurship channel. I do a lot of the day in the life videos where I show what it's like to run my business, and I'm very transparent about everything, and I try to give tips and lessons, not just about entrepreneurship. You know, I try to give life lessons too, like philosophy lessons, and I try to give financial advice too. I'm not about to say like the whole like, this is not financial advice. F***ing sue me, I don't care, bro. But yeah, so every once in a while, you know, I'll talk about some investment information that I'd like to share with you guys, and to give you confidence that you can beat the market. And in fact, not only myself, but Peter Lynch would argue that the amateur investor has an edge over Wall Street, because the amateur investor is not constrained by anything. Not only that, not only is the amateur investor not constrained by their reputation, aside from maybe their wife getting mad at them and making them sleep on the couch here and there, but you're not going to get fired from your job for picking a bad stock. You know, a lot of people on Wall Street are very scared to pick riskier stocks, so they stick with, you know, stocks like Apple, because if Apple goes down, even though I think Apple is overvalued right now, if Apple goes down, you know, they just say, oh, what's wrong with Apple? You know, there's something up with Apple. Not, oh, you're an idiot, why'd you buy Apple? On the other hand, if they picked a more risky stock, you know, maybe a company that recently IPO'd, the company has good fundamentals, you know, their revenue is growing and all, but it's maybe has a lower market cap, and, you know, most people aren't too keen on it, at least compared to like Microsoft or Apple. And if it happens to have a bad quarter and it goes down, everyone's gonna be like, you're fired, you gotta go. As an amateur investor, you don't have to worry about that. Not only that, but Wall Street is literally constrained by market cap sometimes. Sometimes these institutions literally have to sit out the 10-bagger run because they're not allowed to invest until it hits a certain threshold of market cap. So they have already missed like the exponential phase of the stock. Like, don't you want to pick a 10-bagger company, as Peter Lynch calls them? Like, don't you want to pick a company that has, you know, the greener pastures ahead, you know, tons of growth ahead? And not only that, you know, the most important advantage from an amateur investor is that you have a job outside of Wall Street. You have a job, you have a life, you have hobbies, and all those things you can analyze and think, okay, like I just went to this store today and there was a huge line outside. Like say it was Abercrombie. You know, there was a huge line outside Abercrombie a couple years ago. This is actually a true story from my friend Austin. He saw that Abercrombie had these crazy lines and he realized Abercrombie was on the trends. He liked all their clothes. And way before Abercrombie had all this hype, he was like, yeah, I'm going to buy the stock. He's not a professional investor at all, but he made so much money and he was so right on that just from his personal experience. And this is the edge that amateur investors have. You guys have lives. You guys have hobbies, a job. You know, you have an area of expertise in your life. Like for me, I recently, made a good amount of money off of a stock that was very relevant to the business I'm in. And I went to found it without, my experience in the business. And so don't try to look for what stocks, Wall Street is suggesting. By then it's already too late. By then it's too late. The good news has already been priced in. You got to be ahead of the game. And in general, like it's so difficult to find market alpha, but I really think the way you find true alpha is from real life. It's not by looking at data. It's not by looking at charts. It's real life. And this includes real life interactions with people and looking at those interactions backwards. I remember recently I had a conversation with some professional like NVIDIA research analyst, and he was like heavy invested into NVIDIA, and I believe NVIDIA is a below average investment right now because of how expensive it is. And there's so much good news already priced in for it. That doesn't mean I think it's a bad investment. I think it's a below average investment. So it's not in my portfolio. Obviously, I don't doubt, how great of a company it is. I've complimented how great their company is in prior videos too, but this guy was talking about, he's big on NVIDIA, but even despite the fact that he's a big investor into NVIDIA and he loves NVIDIA so much, he's actually sitting out this market right now. This was back in April during the tariff scares. He was actually sitting out the market. And he was talking to me saying like, yeah, there could be like another like 20 to 30% downside. Like we still haven't really seen, the worst of it. And that was just music to my ears. Because I explained like, that's exactly what you actually want to hear. A professional analyst, a professional researcher who spends a lot of time in this, to actually be suggesting to not get into the market. That's what you want to see. Like, it sounds so backwards, it sounds so crazy, but that really is the ideal time to buy, most of the time. And it did turn out to be the case that, the market has gone up a bit. We'll see what happens, with this tariff situation. Obviously, there's still a lot of uncertainty in the air. And again, that's actually a good thing. So yeah, when you interact with people, especially, Wall Street professionals, try to look at their sentiment. Analyze their true, raw, authentic sentiment. Do they walk away from the punch table after you mention investing? If they do, it's probably a good time to buy. Do they try to give you stock advice? If they do, it's probably getting close to the top of the market. I wonder what event is going on here. I kind of just drove down to the beach for fun. It looks like there's some activity going on here. Wonder what this is about. I'll take you guys to the beach for a little bit, show you the view. Figured I'd do this video instead of a day in the life, switch it up a little bit. The views haven't really been increasing, so I figured, we'll do a little change of pace. All right. What's going on here? Guess they got a band, something like that. Interesting. The live music already started at 5:30. I see, I see. Cute. Not too crowded today, but this place is usually nice, you know, summertime. Used to come here a lot on Wednesdays. The DJ comes down here. It's pretty fun. Looks like they're kind of finishing up tonight, though. Wow, would you look at this view? You see, you know, I was just kind of joking about the whole money doesn't buy happiness thing. You know, that's just a joke. It's things like this that actually make me happy. Like, look how beautiful this is. Sometimes you gotta take a second to actually appreciate the world. Because holy, this is so beautiful. It's the best time of day. Oh my God. Feels surreal out here almost. What were we talking about before? I think I got across everything that I wanted to say, you know, all the important takeaways, because I wanted to share with you guys that me coming from a scarred past of losing over $300,000 investing into companies just because I thought they would affect the future, not really knowing how to invest, and then being scarred from that experience and just saying, oh, no one could beat the market, you know, just stick to the S&P 500. And I wanted to share with you guys that, you know, I've had an epiphany. You know, I've had a change. I think not only can I beat the market and can you beat the market, but I think we have an edge. I know we have an edge. I love that song by Billy Idol, Rebel Yell. Anyway, not only that, but that was just a quick analogy I wanted to share with you guys on, in my opinion, the most important thing to know about markets is that things are backwards. You can't be part of the 90% of investors who lose money. You have to do not the opposite, like I explained before, but you have to be skeptical when others are optimistic. And you have to be optimistic when others are pessimistic. So yeah, next time you go to a cocktail party, you know, maybe bring up investing and see what people's reactions are. And you could take this a step further and maybe even, like, to an investor friend, someone who already invests, mention a company and see his reaction on it. Is he very excited about it, or, you know, is he skeptical about it? And try to look at things through a reverse lens. Hopefully that makes sense. Let me know if you guys like this video more than my other day in the life videos. I'll make more like this where I just kind of yap and share things that I think might be helpful. were leaving before it's done. That would have been so much traffic.
Une esprit merveilleux qui donne la frisson. C'est si bon, ces petites sensations, ça vaut mieux que million. C'est tellement, tellement bon. C'est bon. Voilà, c'est bon. Les passants dans leur bras dessus, bras dessous.
Ski trails on a mountainside, snow lines in Vermont, telegraph cables they sing down the highway and travel each bend in the road. People who meet in this romantic setting are so hypnotized by the love